Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Scott Bauer. Hey there, Scott.
Jeff, how you doing?
I'm doing great, and it's pretty interesting to see. January's off to a decent start, up about 2%, and we have high expectations this week for this Phase 1 trade tariff resolution. Are you optimistic as we start 2020?
I am optimistic, and I think the market is looking beyond the signing of this Phase 1 deal and onto what I know you're about to talk about, the earnings season.
Well, earnings season is really interesting, obviously 4 times a year, but we get really excited going in earning, and I think we have a little more certainty now with this potential trade tariff resolution in place.
No doubt about it. We've seen forward guidance actually come down a little bit, so the optimism should be out there, really.
There it is. We have optimism in 2020.
Yes.
Let's get into the first lightning round. You ready, pal?
Absolutely.
Earnings season soon. Well, you hit the nail on the head. You know what we're talking about. So my question right now is, in your trade example, as we're seeing about a 2% gain already in the month of January, are we going to see a double in that gain? Is earnings season really going to be the catalyst that vaults us up nearly 4 or 5% in the month of January?
Anything is possible, but really, I'm looking at taking a tactical approach here. So I'm going to sell the week 4 $33.50, 3,400 call spread in the E-mini S&P 500. And the selling of this call spread, Jeff, allows an investor to collect about $32.
I like this. And this call spread expires week 4, so that's Friday, January 24th. And we talk a lot about option premium, elevation of volatility. And this week, this call spread that you're alluding to is only collecting $32, but that's like hitting a single, and you're still collecting. If you times that by 12 or every month, that is a consistency which you can utilize options on futures.
Yeah, absolutely. That volatility is only trading about 8.65 with a reference on the March future of 32.85.5. But this is really, again, a more tactical approach to the continuing upside of the market.
Oh, great stuff, Scott. And please remember, these are trade examples, not trade recommendations. Let's move into the second lightning round, pal.
All right.
Treasuries. Well, evidently, as we see the 10-year note still under 2%, and yes, the year is 2020, there still are buyers of U.S. Treasuries. So my question to you, Scott, is does this market, specifically in the 10-year note, stay range-bound?
We've seen that range, Jeff, over the last 6 to 9 months or so, and it has been range bound, and we're back towards the upper end of there. So I see that in the foreseeable future.
Well, if we talk about the last 12 months, look at the year of 2019. The U.S. Treasury sold, yes, with two hands, they sold $2.55 trillion worth of bonds. That's about 250 trading days. Let's break it down, do the rough math here. About $10 billion a day they were selling. That's a lot of issuance, Scott.
There's no doubt about it. And, it's not as fluid as that, but you're right. The average, about that $10 billion a day, that is a big number.
And that really dovetails into my thought process of why we stay range bound, due to that appetite. You're seeing that global appetite, even at 185, 190, the higher end of that yield in the 10-year note, you're still seeing global attraction due to the fact that if you look at a German Bund, still in negative territory. So what I want to utilize is to stay true to the range. I want to be a seller of the week 5, 128.5 or 128.16, 127.5 or 127.16 put spread. By selling this put at 128.5 and buying the 127.5 put, this allows an investor to potentially collect $122. Pretty handsome premium.
No doubt about it. And that's in reference with the March futures here, trading about 129.04. And the volatility is a little bit low. It's 3.36. But again, like the previous example here, this is a more tactical approach, this time really looking to stay at that range that we've seen.
Yes, and I think the range in 2019, which we saw a lot of issuance, like we noted earlier, yes, the market took it in. Therefore, that range, that 170 up to 195 in the 10-year, I think that stays true in 2020 as well.
Certainly looks like it.
All right, well, Scott, thanks as always. We want to thank you for tuning in to Striking Options. And please tune in every week as we will continue to strike options.